Let's have a look at the Bank of England release. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the overgrown child that is the Scruffy Trader. And I've got my Christmas hat on because it's nearly Christmas. So Langers is a happy boy. And also a little salute to my friend John, who sent me this. It's all built. My own Lego Star Wars. Fantastic. My AT-AT. So that's got pride of place on my desk. So let me see if I can do something for you and show you something very, very simple to trade. It's dead easy, this. So what I'm going to do is I'm going to fire the screens up. And if you bear with me, I'll just switch them on. And what we're going to do is we're going to have a look at a retracement from the Bank of England's news release that's just happened today. Now, there are key ways to trade this, and I've been discussing it this morning a little bit with the Scruffs. So let me just fire this over and we shall find out. There we are. Okay. What we're looking at here is an hourly chart, and that has rocketed up. It has gone up in a straight line 91 pips. All right, straight line. Now if I drop that to a 15-minute chart, you can see how violent that move is. In fact, it is horrific. Now there are key levels that this will come to, and like I say, the guys were looking at it here, and I've told them it's going to push to a level. Well, it has, and I also showed them earlier on what those levels are going to be. Okay, and the idea of this trade is about as simple as it gets. It is watching it scream up, waiting for it to stall, and then pull back. But how do you know when to get into it? It's very simple. That's where your Fibonacci tool comes into place. Now, you cannot use Fibonacci on its own. You definitely need to use it with other sort of indicators and levels, etc. But what it can do in a situation like this is map out the candle, you know, because it's mathematical. You can do it in a quarters theory as well. Now, quarters theory is exactly what it says it is. It is just breaking up the candle into quarters. So you just divide it by 4. And you're working from each quarter to the next. And that's a very simplistic, easy way to do things. Personally, I just like a simple measuring tool. And all you need to do is look for the start of the move, which is there, pull it up, across, you have an entry, and then you've got exit points all of the way down. Very, very simple. Now, if I set this up, what I'm going to do is I'm just going to drop some orders in, because I'm not really doing a lot at this moment in time, because I'm kind of on holiday of sorts for the rest of the year. I don't trade a lot during the last part of December. Why? Markets are very erratic. This is about as erratic as it gets. It's just straight up, and now it's stalling somewhat. And the principle here is simple. as long as this does not break the top, then it has to come back. And if it's coming back to here and here. So if I put another order in to go to there, for argument's sake, just drop that into place and just put that there, that could pay reasonably well with very little pain, because all I've done is I've just mapped out these candlesticks over the course of the last 45 minutes or so, because that's all I needed, and I'll just let it play out. Very, very simple. So if you think of it this way, if I just draw in a little sort of rectangle there, I'll just colour that in sort of red, and then if I duplicate that and put that down there, if you were breaking the chart up, that is a trading arena. You can see where it's in and out. You don't want it to exceed the top of here, and there's probably pushing the outer limits. And your target, well, if we put a green one in the middle, this area here, just like so, I can take that away. I've now got built from the move of the candle a Fibonacci tool and some basic chart reading, if you like, an arena to work in, a defined exit point, as in the green, and then a little area that's point of no return. And what do I mean by that? If it's gone that far down, the chances are it's probably at the end of its move. And what do I say to you guys all the time? Don't look for the top third, don't look for the bottom third, look for the bit in the middle. Well, there you go. So what we'll do is we'll just see if it triggers. If it does, if it doesn't, don't matter. And we'll just fight another day. And it's kind of the way it works. So it's either going to trigger here, or it's going to break the tops of this, and if it breaks the tops of that, trade's null and void, and you just walk away from it. So good stuff. All right, I'll just let it play out and we'll see how it gets on. Okay guys, job done. Mapped out. Didn't go against me a great deal, not in the grand scheme of things, and a little bit of scaling, a little bit of thought, and it's paid me. And how much has it paid me? 200 quid, which is all I ever look for. And it was pulled into sort of a risk-free situation. I'd scaled out, took the bulk of the money, and then just let it run a little bit. Now, I know people look at this and they always, you take too much off too quick. Do I though? The thing is with trading, it's not about being a hero. It's about managing your trades. Now this was mapped out, as you saw. I mapped it out fully. The actual mapping of where the move started and where it stopped lined up with levels I put in on Sunday for the Scruffy Squad, and it stopped bang on it virtually to the pip. And then it's a case of monitoring it, which I did, consolidated. So if it wasn't pushing any higher and it was in a level, the logical thing it can do is come back on itself. But the question is how far can it come back on itself? Is it going to come back a little bit and rev up a bit to sort of break through that level, or is it just going to filter away back on itself, almost like what the Fed did last night? The Fed rocketed down last night and then not only retraced 100%, it kept on going, you know. So it's a strange situation what was going to be happening today when you watch cable, you know, because like I say, last night it just thump, but then came back up. Then you had the ripple effect of the Bank of England today, forcing that up again, and it pushed it right the way up. How many people are going to continue to buy it? And that's what retracements are. It's just where people are taking opposing positions and actually being wrong as well, you know. So the market has to slow and it has to breathe, and that's what you've seen here today. So there you are. I did it just simply because I showed the guys what my levels and everything were this morning, and I just wanted to kind of back it up and do a little trade. So I hope it helps. By all means, check the description. You'll find all my contact details there. If you're interested in how I actually made this up and traded it fully, because what you see here is just a little snapshot, it's not the actual trade, do check the Scruffy Squad out, because I go through everything to ensure that these trades are not only profitable but highly probable. And that's the thing, because that's what we deal in. We deal in probabilities, and I have a current hit rate well over 80%. Don't win them all, but I win a lot of them. And then it's a case of managing your trades. I'm wrong, I need to get out, or I need to manage out, and I show you all of that as well. So as always guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.